Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the NDX, which is the Nasdaq 100, and we're going to be doing our Elliott wave analysis first and then some basic technical analysis at the end of the video. First things first, we're getting to that time of year where my allergies are really starting to play up now. Now I'm all doped up on the necessary antihistamines, but a pollen count is getting pretty high, and it can affect my speech and make my throat pretty scratchy and my nose pretty bunged up. So it comes and goes. It's not playing up too much today, but it's just becoming a bit of an issue while recording, I've noticed recently, and I'm having more and more issues with it, but we'll muscle on and do the best we can. So in case I start coughing and spluttering, that's why. I'm not choking on anything or haven't been diagnosed with anything, but it's just allergies. Right, so we're going to start here with our bearish interpretation. And then we've got two bullish counts to look at as well. One that's brand new and is just a very rough idea, not designed to shake anybody up or anything, but we'll come and have a look at it last before we wrap up the video. But we're going to start here with our bearish interpretation. So we have a bullish count on the SPY, as you know if you watched the recent video, suggesting the new all-time high will push higher. Price action will continue to push higher. But we're saying that the tech index, the Nasdaq, has already peaked and is leading the way down and is currently in a correction of a downward trend, the first of which, of perhaps many, what we call a retracement. So we will come and have a look at that in a bit. But first, a quick recap. After completing our primary 4, we have 5 intermediate waves leading into our primary wave 5 into our cycle wave 5. And then inside of the fifth wave, intermediate wave, we had 5 minor waves. Pretty poor symmetry here with a 1, 2, 3 is longer than a 1, so that's okay, no overlap. But then we get a very small 4 and a very small 5, very weak 5, only just making a new high, almost a truncated fifth. And then we have not made a new high since, unlike the SPY, which made an intraday high. The SPX has not yet, and neither have closed at new highs, so it's not official. I'm just saying that on the SPY chart, we made an intraday new all-time high. We traded above the previous all-time high. That's the way you should say it. We didn't close there, but we traded above it. So the Nasdaq and the Dow Jones have not done that yet. So still remaining bearish until proven otherwise. On the Nasdaq, we're assuming we've had a 5-wave move down, as we could not count 5 waves up in the same way as we did at minor level degree in the SPY, as it resulted in an invalidation of the wave 1, and therefore we assumed a slightly different count. Now, I just want to point out here that this is not based on any personal bias or fundamental reasoning. This is a technical analysis channel after all. So for those of you, and there aren't many of you, but some of you, for some reason, take offence to the idea that your precious Amazon, Apple, Google or Facebook stock has topped and you're about to lose money. I just don't care. Alright, I'm not interested in your fundamental reasoning as to why they should go higher. I'm not interested in your monetary reasoning or your fiscal reasoning. I couldn't care less. This is a technical analysis channel and we're here to interpret price data, and that's it. I'm not trying to offend anyone or trigger anyone by suggesting the market is peaked. I'm just interpreting that way because the price action is giving me the option of doing so, and I think it is better to interpret it this way currently until proven otherwise. That's it. So don't take it personally. Some of you just get triggered for some reason. But either way, if you're balls deep in these things and they go against you, that's your fault and nobody else's. If you're balls deep in the US 100 tech and it goes to the moon, that's well done. Congratulations. Good for you. So let's just forget about that for a moment and just continue to interpret the price data from a purely technical point of view. So let's come down to the 1 hour for a moment and have a look. So leading the way down in a diagonal, 1, 2, 3, 4, 5. I mean, you guess you can count it as a legitimate impulse wave. We do not have an overlap of the 4 over the 1. It's very close, but because we get a running flat here in the 2, we do not get an overlap of the 4 over the 1, so we can count it as a pure impulse. The 3 is not the shortest, although the relationship of 1 being short, 3 slightly longer, and 5 even longer does tend to fit an expanding diagonal pattern we have here. Then we bottom out into what we're saying is our intermediate wave 1. Then we get a 3-wave move into what I'm saying is an A, a 3-wave move into a B, and then a 1, 2, 3, 4, and then working on a 5th into a 2. Now, I will say I'm losing faith in this bearish interpretation. Like I said, I'm not married to one or the other. Either way, I couldn't care less. I'm just looking at the price data, so I'm not married to my bearish idea any more than I am a bullish idea. But why am I going off this bearish interpretation? Well, here's the golden ratio at 61.8%. Here's the 50 first, the blue line. We didn't even stop to say, well, we reversed around it, but we didn't come to it. We didn't even stop to bother considering the importance of this level. We came straight through the 61.8 as well, with no respect for it either. We came to the 707, which is, I find in my experience, does tend to show up here in the Nasdaq more often than in the Dow or in the SPX or SPY. The 707 does seem to show up. We came to it, backed off, but we've since broken that level down and gone further again. So really, we've invalidated the 50, the 61.8, the 707, and another important level, which is the 161.8% extension of C equaling A. So this is the A. We take 161.8% of the length of this and project it from our B to find our C, and we've gone through this level too. Excuse me. We've gone through this level as well. So really now we only have the 78.6 left as a retracement. Yes, we could come potentially all the way up to 99.9% of the initial move down and still be a legitimate wave 2 with a very, very deep retracement. But every fib level you take out on the way up, the higher and higher we get, the less and less likely that we are in a wave 2, because we should have probably found resistance by now. But we'll keep an eye on this, because until the level at 14.073 is taken out, this is still a valid count. So we will continue to interpret it bearishly. We do have backups we're going to go and look at, but we are looking for resistance around, I'll tell you what, let's just delete this 1618 level. It's no longer relevant. Excuse me. So looking for resistance around 13.847.84. This is a 78.6% fib retracement of this wave 1. Another target that we can look to. If we go through this, then we're just looking for the high. Does the high remain in place, or do we go through it and set a new high at 14.073.92? If we set a new high, we'll be looking at our bullish interpretations instead. But for the meantime, this bearish count is still valid. A breakdown below the level of the 1, if we do get a violent move down, then we can consider the start of a wave 3, and move past this level would give us greater confidence that the bearish interpretation is indeed correct. Alright then, so we're going to save the bear count there, then we're going to come over and have a look at a couple excuse me, of alternate counts. Okay, so here's our more bullish interpretation. We're still working at minor wave degree, intermediate wave degree, but we're considering not having topped yet. So in the bearish count, we say this was 4, alright, and we say this was 5. Now in this count, we're saying 5 isn't in yet, and 4 has only recently come in. And that's over here. And we got that by having a running flat. So instead of a move here for a 4, which I have to admit I prefer the alternation here, because we get a nice 3, 3, 5 running flat pattern. B comes beyond where the A began, C completes before where the A completed, a running flat with 5 waves in the C. So I've always liked this. It's just the way I've counted it up until the top is still supporting the bearish idea for the meantime, but I do like this setup from a bullish perspective as well, and this is my preferred count from a bullish position. The only issue I have, and it is a pretty big one, is this 3-wave move and 3-wave move here. You cannot get an impulse wave off of this low. If anyone has, then congratulations, you're seeing something I can't see, but it doesn't matter what time I come down to, I can't find 5 waves. So you're either cheating it and you're forcing 5 waves where there isn't 5 waves, or you're seeing something I can't see. Either way, This is going to either be a diagonal, like in the SPY, and here's our options. The less bullish interpretation, right? The less bullish interpretation of this more bullish count, trying not to confuse people, is that this is going to be a diagonal, right? And it's going to just squeak out a new high. 3 waves, 1, 2, 3, 3 waves, 1, 2, 3, 3 waves, 1, 2, 3, 3 waves at a stretch in a pretty big 5. 3 won't be the shortest, so it will still be legitimate. But in order to make a new high, the 5's got to get up to here, which I'd argue is believable. And that would give us a new high, and then we would have a completed 5th wave, intermediate 5th up here, and then we're done. And then we'll roll over. There's also the option that we won't make a new high, that we have got a diagonal, and we'll end up with a truncation. So the 5th will finish. Well, I guess legitimately, let's think about this logically, because we're dealing with an expanding pattern, right? So we've got to be mindful of the position of the 3. It's very easy to get obsessed with this swing high here where we shouldn't. If we get above this blue line, then we haven't truncated, because the 5th would have finished beyond where the 3 was, even though there's a swing high in the middle. You understand what I'm saying? So we could, and this is me for a moment when I was just counting up a minute ago, getting easily distracted by that fact. So here's the level that matters, the 3. So let's just put a price label over here. This is the top of the wave 3. Any move which goes beyond that, that is a higher high. Okay, so forget your traditional price data for the moment. Well, this higher is higher than this high, yes, but from an Elliott waypoint, from an Elliott wave perspective, we've completed higher in the 5 than we did in the 3. We've gone beyond where the 3 completed. We had a swing in the correction here, okay, but we still completed higher than the 3 in the 5th. So legitimate impulse wave in that regard. Now, in terms of recent price data, it would appear truncated and to have finished before the previous all-time high, but we have to be mindful of where the 3 was, of course. So we could do that. We could, a truncation, it could even be here. We could have gone 1, 2, 3, 4, 5, done enough, truncated before the 3, about to roll over now. That would be a pretty bearish way of interpreting it. I hadn't really thought about that. 5, that's just beyond the 3, and then we roll over, short of the previous all-time high. 5 that's just beyond the previous all-time high and beyond the 3, maybe at this 61.8% primary extension of 1 and 3 from 4, and then we roll over. All of these are suggesting a move beyond the 3, a move slightly beyond all-time high, and then failure later on in the summer. However, there is another interpretation, which is, yes, this is a diagonal, but it's not an ending diagonal, it's a leading diagonal. Or how can that be? We're in a 5th wave. Because 5th waves, like any other impulsive or motive wave, the 1, the 3 and the 5, they have a first wave in them. So what if this is 1, 2, 3, 4, 5 into a 1, into a 2, into a 3, into a 4, into a 5, and we've actually got a huge move to come in the Nasdaq. Okay, so this gives us much higher pricing, and this would be on minor wave time frame. So if this were to happen, if we were to get a 1, 2, 3, 4, 5 wave completing leading diagonal around the previous all-time high, slightly before it, some kind of relationship between the 1 and the 3, 1 and the 5. The 5 could extend here. The 3 is longer than the 1, and we didn't get an extension in the 3, so maybe we get an extension in the 5th, which brings that 1 even higher. Remember, this could also be 1, 2, 3, 4, 5, done, and then over, or it could be 1, 2, 3, 4, 5, 1 on minute time frame. So let's just label that. 1, 2. Now this is all conjecture. Okay, things will get clearer in time, but at the moment this is all just conjecture. So let's say we get a leading diagonal into a 1, a deep retracement in a 2, a usual extension in a 3, making a nice long 3, and then we get a nice time wasting 4, which doesn't come down beyond the 1, and then we get our 5th wave at the top of the channel, giving us much higher pricing. Okay, that's a very uber bullish interpretation. Okay, so I'm just going to save it. I'm not saying that's right. We've got some significantly important levels to respect on the way up, or to keep our eye on the way up. So we've got a 61.8% extension of primary 1 and 3 from 4. So all the way up to our primary 3 back here, the whole length of that, the 1 and the 3, projected from the 4 down here at primary degree, brings us to 14190 spot 70. Okay, and then we've got intermediate 1 and 3 from 4. So the entire length of this 1 and this 3 here, this whole move up, projected from our running flat bottom at the 4 here up, gives us this target at 14934 spot 74. So you could argue that the first target supports the idea of 1, 2, 3, 4, 5, new high, then we break down. We hit this major level. You could argue that maybe the second interpretation, I've been a bit excessively bullish here, and we could have a 1 and a 2, and then we could have a 3, and then a 4, and then we could have a 5, perhaps finishing at this second level here, bringing in the top of the market. That's also an option. Right, 1, 2, 3, 4, 5, and this is a major wave degree here. We've also got, once we get a 1 and a 2, if this is correct, we've also then got to project from our 2 the potential for a 3 to get these targets. This is all just speculation at the moment, so let's leave that there. Bullish interpretation. We want to keep an eye on the 13868 spot 54, as this is the wave 3 high. Any move above that is a completed 5-wave structure, potentially finishing without a truncation. Alright, any move above the all-time high, then we should be looking at the 61.8% extension of primary 1 and 3 at 14190 spot 70, because that's a likely sticking point. If we blast through that, then we should be looking even higher to targets at 61.8% extension of 1 and 3 from 4 to find intermediate wave degree here at 14934 spot 74. So there's your bullish interpretation. And then we've got a wave 4 invalidation, which obviously was all the way back here. We're saying we've completed a wave 4 now. So really we'd be looking for a breakdown outside of this channel, but we have to see what comes of this recent price move up. Do we go on and make a new all-time high, as the SPY is likely to do? Has done on the intraday level, but we want to see a close there first. And is the NDX going to follow suit? Now, finally, we are really getting on for time now. So, finally, we're going to look at an uber bullish count. So, the same applies to the bears who are like getting angry and frustrated that this thing just keeps going on and on and on. You know, technical analysis again, this is a possibility, so don't get your knickers in a twist. Right, this idea works on the premise that the primary wave 1 is where we currently have our wave 3 and our wave 4 on our other counts. So instead of this being 3, 4, this is actually 1, 2, and we're going a lot higher. Okay. So this idea, and it does divide neatly, I'm not going to argue with that. We get an extension in the 1. Now, the reason I think it's an extension in the 1 is if we take a pitchfork here and we apply a pitchfork to a swing high, swing low for primary 1, 2, if we apply our pitchfork as a conventional pitchfork, which is where we would expect to see the typical extension for a wave 3, an acceleration into a wave 3, so that would be an original pitchfork, we're nowhere near it. We've fallen well out of it, have slacked off considerably and lost momentum in comparison to the thrust up in wave 1. So the massive V-shaped COVID bounce from below gives us an explanation for an extension in the wave 1, and technically it's supported, so we like that. If we move to a shift pattern, pitchfork here, we can see that the swing high, swing low price data since has been pretty well contained by it. So this supports the idea of a big 1, a smaller 3, and then an even smaller 5. But this could still take us, you know, a bloody long way up. If we just hide this for a moment. So if we now this isn't particularly fleshed out, this count. Like I said, it's a new idea. But here's what I like about it. As an alternative, I'm not saying this is my chosen count. I'm still following the bearish count primarily. Then we've got bullish alternate 1, which we just discussed. This is uber bull alternate, not to be considered until more price data to support it. So 1, 2 zigzag. All right, 1, 2 zigzag, smaller wave degree. 3, 4 running flat, smaller wave degree, intermediate time frame, alternation with intermediate 2. Different way of interpreting this now. We can say 3, 4, then we're going to come up in an ending diag, remember? 1, 2, 3, 4, 5. Or it could be the leading diag of an ending diag. Who knows? We're going to come up and find a 5 somewhere. It could be soon, just above the 3, which would look pretty funky. It could be further up, like we discussed in the previous pattern. But rather than topping in a 5 in the previous pattern, we're just topping in a primary 3. We will then get a 4, which should alternate as a flat pattern of some sort. Some kind of flat pattern. Okay, whatever it is, to find the 4. To alternate with the primary 1, a primary 2, and then we'd have that thrust up again in the primary 5, taking us even higher in the Nasdaq, higher and higher and higher. So this is extremely bullish, an uber bullish count. So I'm going to introduce this onto my Discord as well, in Tom's charts section if you're a Patreon. This would have already been loaded up before this video was loaded up on YouTube. So, alright, I'm not going to dig into this. This is just a rough idea. So there you go. Here's the third and final uber bullish count for the Nasdaq. Bearish one is the one we're still looking to see if it's true. Do we make a new all-time high? Do we stop at the 78.6? Then you've got your bullish alternative. Is this an ending or a leading diagonal? We're looking for a move above the 3 so that we don't truncate. We've then got these 61.8 targets of both intermediate and primary wave degree to look for resistance, which still provides an all-time high, new all-time high for the Nasdaq going out into the summer, which should help support the SPY interpretation doing the same. And then we finally got our super crazy uber bull over the top pattern, which is still technically sound and could turn out to be true. So I hope presenting these 3 counts has not confused you and has not added to the confusion. We are just in a bit of a sticky situation. You know, we've come a long way since the lows of March 2020. We've come a long way since the start of this bull market in 2009. We're very overextended. We're very overstretched. We're very overbought, and we could be topping out soon, which is my personal technical preference, is that we're topping out relatively soon, or we could just really be getting on the way with months and months and months, or maybe a year or so of more bullish activity to come. So there you go. Right then, so let's get through our technical analysis quickly, our basic technical analysis quickly. Let's just clear off the Elliott wave count. Let's come to the weekly time frame. For the moment, we're going to zoom in on the more recent price data here. And then we're going to bring up 10 exponential moving average in yellow, 20 in blue, 60 in orange, 250 in green. We're then going to bring up our momentum indicators. We have an RSI set to a 10 close with green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a short-term moving average in blue, which is a 10, and a long-term moving average in orange, which is 20. Alright, so same bullish candle in the NDX that we had in the SPY. Long wick to the downside, coming through the 10 exponential moving average, looking bullish, ready to push higher into the week ahead, is what I would expect to see. Alright, above the 10, above the 20, above the 60, above the 250. Still uber bullish over the long term. Starting to get, well, I say starting to get, is gigantically overstretched from a long-term moving average. Wow, did not appreciate that. 61.17% above the 250 moving average. You can see how the Nasdaq's always been a little mental like that in terms of getting a long way away from these long-term EMAs. But we really are stretching it now. Okay, really are stretching it. We don't tend to come down to test it very often. We do come through the 60. We often settle somewhere in between it. The 250, perhaps I should replace it on the NDX chart, as it doesn't seem to have, until we get down to the day time frame, any real significance on the weekly time frame. But either way, it's a long way above it. We are a pretty long way above our 60 exponential moving average. We're a good 15% above that as well. So long way to fall potentially. Continuing, constant, never-ending bearish divergence in the Nasdaq week after week after week. It's just there. High, lower high, lower high, potential lower high, maybe if we make another high here. Same in the MACD, high, lower high, lower high. It's been going on for almost a year. Not quite, it's June now, that's from August last year. So 2 months off having gone for a whole year of bearish divergence building up on the weekly time frame. Higher highs in price, lower highs in RSI, lower highs in MACD. Okay, let's come down to the daily and have a look. Above the 10, 20, 60, 250 at the moment on the daily, having swung below them in what we're saying in our interpretation here is bearish, saying that we've gone 1, 2, 3, 4, 5, down 1, up into a 2 that's now going to roll over lower sometime soon. Bullish interpretation looking at this, of course, as that running flat pattern, and now either a leading or an ending diagonal into either a 1 or a 5 and a new high and collapsing. They're the options. Yeah, we can see that bullish divergence from September on the daily time frame. High here, lower high here, lower high here, potential lower high to come. It's not in yet though. And yeah, same in the MACD as well. So it's not as strong as it is on the weekly time frame. And we have made a round trip from overbought to oversold, so not convincingly so. But you could argue that the RSI is reset. If that's the case, then we should see higher readings in overbought, and that would support the idea of a leading diag pushing much higher in price. But we should see momentum indicators to support that, and at the moment we don't. So we'll stick with the interpretation of the market having topped for the meantime. Right, is there anything significant other than that? This does look incomplete. That's all I'm going to say. If this is a diagonal or leading diagonal or whatever, then I'd say that we've got 1, 2, 3, 4 waves done. So we should be in the fifth of something now. Well, whether it's a fifth and it extends to a new all-time high, whether it's a fifth and it just clears the 3 in order not to truncate before rolling over, or whether it's a 1 and we're going to have a pullback and an explosion. These are all options. Things will become clearer in time. Alright then guys, I hope you've enjoyed this technical analysis of the NDX. It's been a bit of a long one, this one, with so much to cover. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. If you want to leave us a comment in the comment section below, feel free to do so. As always, thank you very much to my Patreon subscribers. Your support is greatly appreciated. I will be uploading that uber bullish count to our Tom's chart section. If you are interested in becoming a Patreon, now is the perfect time to do it. It's early in the month. Go over to the Patreon, follow the link in the description box below, have a read of the tiers, see if there's anything that you're interested in. Alright, and if you're not following us on Twitter yet, I also have a link to my Twitter feed in the description below as well. Alright guys, take care, and I'll be back with you shortly. I'm not sure what I've got to cover this week. I've got a list I need to look into, but there's quite a few assets I want to get covered this week, so probably be looking at a video most days this week for YouTube. Alright guys, take care, be back with you shortly. All the best, bye bye.